السلام عليكم ورحمة الله وبركاته. أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. أم حسبت أن أصحاب الكهف والرقيم كانوا من آياتنا عجبا. إذ أوى الفتية إلى الكهف فقالوا ربنا آتنا من لدنك رحمة ربنا آتنا من لدنك رحمة وهيئ لنا من أمرنا رشدا. فضربنا على آذانهم في الكهف سنين عددا. ثم بعثناهم لنعلم أي الحزبين أحصى لما لبثوا أمدا. نحن نقص عليك نبأهم بالحق إنهم فتية آمنوا بربهم وزدناهم هدى. صدق الله العظيم. السلام عليكم ورحمة الله وبركاته.
Assalamu alaikum wa rahmatullahi wa barakatuh. Bismillahir Rahmanir Rahim. Alhamdulillahi Rabbil Alameen. Wa salatu wa salamu ala khatimil anbiya'i wal mursaleen. Nabiyyina Muhammad sallallahu alayhi wa sallam wa ala alihi wa ashabihi ajma'een. All praise is indeed due to Allah subhanahu wa ta'ala, Lord of the worlds, and complete blessings on our Prophet Muhammad sallallahu alayhi wa sallam, his family and his companions. Distinguished guests, ladies and gentlemen, Selamat Datang. It gives us great pleasure to welcome all of you to this 5th IDB Youth Development Seminar on Innovative Solutions for Financial Inclusion in this wonderful city of Jakarta. Over the past 4 years, 4 successful youth development seminars have been organized on the sidelines of the IDB annual meetings. These seminars brought together influential thinkers, policymakers, entrepreneurs, and international development policy experts to address, discuss, and debate critical issues of relevance to the youth around the globe. This seminar comes at a critical moment when access to finance has been recognized as a critical element in fighting poverty and enhancing growth across the world. The explosive growth in internet penetration and rapid advances in mobile technology have facilitated the emergence of innovative applications to enhance access to finance, especially among the population segments that have historically been underserved and underbanked by the financial services industry, such as the young, the women, and the rural population. Today's seminar promises to be enlightening and will feature a high-level panel discussion followed by a TEDx-style showcase of pioneering ideas in financial innovation and a dedicated masterclass which will explore innovative solutions to tackle the challenge of providing access to finance. We hope that during the course of the day, you will all get the opportunity to explore such positive disruptions and learn from the people that have taken advantage of this opportunity to make a difference. Before we proceed, we would like to thank the officials of the Government of Indonesia, particularly the Ministry of Finance, for their support for today's event. We would like to express sincere thanks and appreciation to all our panelists and speakers for honoring IDB Group's invitation to share their thoughts and experiences on this very important topic of financial inclusion. So ladies and gentlemen, prepare yourself to be challenged, excited, and inspired. With that, I invite you to watch a short video on financial inclusion. It seems we have a technical problem with the video. Please bear with us. Thank you.
checking and imagine a world where 201 million people currently unemployed have access to the needed finance to get something started. Start a business, a startup, a source of earning, or simply access to reliable financial services for banking, credit, a checking and savings account. These words remain complex and out of reach for most people. Youth unemployment remains a global concern. Only 62% of the world's adult population have a bank account, leaving 2 billion adults with no banking services at all. By contrast, only 35% of youth have a bank account. Financial inclusion is not just about having access to a bank account. What really matters is whether people actually use financial services towards productive activities such as a secure savings, making investments from their surplus earnings, or getting credit to grow a business. In Southeast Asia, for example, only 35% of enterprises have a line of credit or loan from a financial institution. In recent times, there has been a significant growth in financial inclusion. Innovations in financial services can tap enormous resources and money for people who need them the most by blending traditional and innovative ideas. The advent of mobile phones and growth of digital platforms have given financial access and coverage to many more individuals. In fact, digital innovation has helped increase financial inclusion by more than 90%. The Islamic Development Bank Group, a multilateral development institution based in Jeddah, Saudi Arabia, with operations in over 150 countries over the world, is interested in looking at ways to reduce such inequalities and promote financial innovation inspired by the principles of Islamic finance. The IDB is organizing a seminar to explore innovative solutions for financial inclusion of the youth. This seminar will bring together influential thinkers, policymakers, and entrepreneurs to share experiences and address the role of emerging technologies in financial inclusion. The seminar will include a panel discussion, showcase of successful financial innovation, and masterclass series, and much more. Be sure to catch us at the Jakarta Convention Center on the 16th of May 2016 for this exciting event.
Thank you, ladies and gentlemen, for your attention. We apologize for the technical glitch. We will now proceed to our panel discussion. We are honored to have amongst us today the award-winning British journalist, broadcaster, author, and political commentator, Mr. Mehdi Hasan, who will moderate this session. He is currently working for Al Jazeera English, heading two political talk shows, Upfront and Head to Head. Mr. Hasan has been named one of the 100 most influential Britons on Twitter and was included in the annual global list of the 500 most influential Muslims in the world. His debate-winning speech at the Oxford Union on Islam and Peace went viral online, amassing more than 2 million views. Mehdi is a graduate of Oxford University and also the author of 2 books, a biography of former Labour Party leader Ed Miliband, and an e-book on debt and the financial crisis. Ladies and gentlemen, let's give him a round of applause. Mr. Mehdi Hasan, the floor is yours. Thank you. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Ladies and gentlemen, good morning. Assalamu alaikum wa rahmatullahi wa barakatuh. My name is Mehdi Hasan. It's a pleasure and a privilege to be here in Jakarta. It's my first time in Jakarta. I haven't been here before. I haven't been here for very long, only a few hours yesterday since I arrived. Haven't had a chance to see much of this beautiful city. Although yesterday I did get a chance to make a short walk over to the primary school where Barack Obama went to school as a child, which is, of course, if you believe Donald Trump, is the ultimate proof that he's a secret Muslim, because he went to school in Indonesia. But why would you believe Donald Trump about anything? It's a pleasure to be here in Jakarta. It's a pleasure to be here at the 5th Youth Development Seminar of the Islamic Development Bank, the IDBG. It's a particular honor to be invited to moderate this all-important opening session, this high-level panel on youth in development, innovative solutions for financial inclusion. I hope you all got a good night's sleep. I hope you all had a good breakfast and are ready this morning to be informed, enlightened, educated, inspired, energized by this excellent panel who have been assembled here today. No pressure on them. Before we get to our panel, I want to begin this session with a number that many of you may be familiar with. It's a big number, 2 billion. 2 billion. It's 2016, and yet an estimated 2 billion working age adults, that's more than half of the world's total adult population, today do not have access to a formal financial institution, to a current account at a bank, to a savings account, to a credit card, to insurance, to things that pretty much everyone in this conference hall probably takes for granted. Those 2 billion people are effectively unbanked. But financial inclusion isn't merely about bringing banking to the unbanked. It's also about particularly reaching, as the video pointed out, some of the poorest people in our societies across the globe. It's about reaching people in those societies with the financial services and products that they can use to build bridges. It's about building societies based not just, as the old cliche goes, not on handouts but hand-ups, but also about opportunity and access for all. Because remember, this lack of financial inclusion, this lack of access to financial services, to savings, to credit, to insurance, provided responsibly, sustainably, in a properly and well-regulated environment, this lack of financial inclusion is most acute, most serious, of course, amongst low-income populations in the emerging and developing economies of the world, where approximately 80% of the poorest people are excluded from finance. And look, when it comes to financial inclusion, the gap isn't just between rich and poor, between men and women, between urban dwellers and rural dwellers. It's between the old and the young, of course. The youth, the subject, the focus of this particular seminar of today. The youth, our future, supposedly our future. And yet here are the startling facts. Youth are a third less likely to have a savings account in a bank than adults. They're almost half as less likely to save in any kind of form, in any kind of formal institution as adults. Which is strange, given how young people are so much more in tune with new technologies, new innovations. And technology and innovation have been the key drivers of financial inclusion in recent years. Take cell phones. 1 billion people in the world today have cell phones, mobile phones, many of them young people, many of them the youth. And yet many of those same youth do not even have access to a basic bank account. So access to a phone, yes. Access to finance, no. That is a scandal, ladies and gentlemen. Because a life without access to finance, many would argue, is a life full of risk and stress, dangerously unpredictable, and unnecessarily expensive. So what do we do about it? Some of the questions we want to explore this morning include, how do we expand access to finance, and how do you get young people on board with that mission? What role can technology play in providing and facilitating innovative solutions to financial inclusion, especially so-called disruptive technologies? How do they play a role in driving down the cost in terms of accessing finance and driving up security in terms of getting access to finance? What's the right balance between public and private sector initiatives? What role could or should civil society play in fostering efforts to increase financial inclusion, especially in developing economies? Now, we have some excellent, heavyweight, informed speakers to try and get to the bottom of all this, to try and get us some answers. Without any further ado, let me introduce our esteemed panel. I'm going to ask them to come up on stage so I can introduce them. If you want to come up and take your seats, and I'll tell the audience about how wonderful you all are. Sayed Hassan Al-Sagoff is the Senior Micro and Rural Finance Specialist at the Islamic Development Bank. He's designed and managed a portfolio of projects amounting to more than $600 million in countries including Indonesia, Bangladesh, Albania, Jordan, Egypt, Yemen, mainly in the fields of Islamic microfinance and community-driven development. Prior to joining IDB, he was a manager at Spring Singapore, a government agency that supports the growth of small and medium enterprises in Singapore, where he developed the $30 million incubator development program to nurture innovative startups. Ahmad Moore is a Palestinian-American journalist, commentator, entrepreneur. He's co-founder of Liwa.com, a Jordan-based peer-to-peer online Sharia-compliant lending platform that aims to address the capital access bottlenecks that many small and medium-sized enterprises, SMEs, face in the MENA region. In addition to his entrepreneurial activities, Ahmed is an activist for Palestinian rights, a frequent commentator on Middle East politics. His writings and commentaries have been published in numerous international publications, including The Guardian, Al Jazeera English, and The Huffington Post. Nabila Al-Sagaf is the founder and chief operating officer of Doku, Indonesia's first and largest independent electronic payments provider, with primary responsibilities for business planning, business development, and managing Doku's operations. Nabila has over 15 years of experience in developing customer-centric market concepts, IT services, and sales programs for diverse companies and industries. And last but certainly not least, Mohammed Tufail Chowdhury is a partner at PwC with 25 years experience covering strategy, business development, mergers and acquisitions, technology, innovation, and public policy across emerging and developed markets. He's worked in scores of countries across the world as a board advisor to 2 digital startups, has held senior industry and consulting positions at PwC, IBM, Vodafone, and is regularly quoted by the BBC, the Financial Times, and Forbes magazine, among others. Ladies and gentlemen, please put your hands together to welcome our panel. Now, each of them will speak for 5 or 6 minutes, and then we'll broaden it up into a discussion between all of them, and then we'll broaden it up and open it up to the floor to bring in your questions, comments, criticisms even. Sayed Hassan Al-Sagaf, I'm going to ask you to kick off. You can do it.
Assalamu alaikum wa rahmatullahi wa barakatuh. A very good morning to everybody. Now, when we think about youth and financial inclusion, there are many aspects to financial inclusion, but I'll focus mainly on the aspect on access to finance. When a youth goes to a bank, he comes with a business plan, he has a lot of determination, a lot of passion, a lot of energy. He may have some skill, talent, expertise that he would like to commercialize. He may not have the management expertise. He may not have the network to get significant customers. And definitely, he probably will not have assets, which is why he's asking a loan. Now, 99 out of 100 times, the bank will probably reject the loan. The question is why? Is the bank worried that the youth would not have the sufficient expertise to make the business profitable? Or is the bank worried that he does not have the assets to collateralize and to ensure that he would make the repayments? The answer is very clear. It is the latter. The bank only will give loans only to those who have assets. This is the discriminatory practice that banks have always been doing. This is what they call, you have to be bankable. You need to have assets, otherwise we won't provide you the loans. Things have changed, thank goodness, through innovation. The first wave of innovation came about in the 1980s when Professor Muhammad Yunus started a small organization called Grameen. By the year 2006, when he received the Nobel Peace Prize, Grameen-style microfinance institutions is now practiced in more than 100 countries. The second wave of innovation took place in the year 2012, when Safaricom, riding on the success of M-Pesa, Safaricom started a product called M-Shwari. Within just 2 years, M-Shwari has 6.9 million customers. It has disbursed $276 million worth of loans. Now, the first 2 waves of innovation is interesting. The first wave, you can see from hard assets collateral, Professor Muhammad Yunus has been able to change the mindset of bankers to accept social collateral by ensuring that they are involved in social solidarity groups, and therefore this social collateral is sufficient to replace the hard collateral. In the second wave of innovation, you don't even need social collateral. All you just need to do is have a mobile phone, in the safety of your own home, just press a few buttons and you will get a loan. Amazing. The third wave of innovation we believe is coming, and this is what we call Islamic microfinance. And we are, in IDB, we are really promoting Islamic microfinance. And what is Islamic microfinance? Islamic microfinance is not about just providing financial inclusion. It is also about providing economic empowerment. It is not just about providing access to finance, but it is also about providing access to markets, access to management, access to know-how. It is about buying and selling with your clients, helping the clients to negotiate with its suppliers, helping the clients to negotiate with its customers to get better prices. It is essentially about doing business with your clients. There are many examples of how we have been doing this, how we have been able to provide access to finance by helping to change the mindset of the banker to act as traders and investors. If we are able to do this, and we have through our pilot operations, and I'll be happy to share with you some of the examples. Imagine the first case, the question I first posed, when the youth approaches the banker, what is the criteria that the banker will use? Is it on the basis of the assets that he would need to ensure that whether he will be able to make repayments? Or the criteria of the bank is to ensure whether or not the youth has the expertise necessary to carry out his business in a profitable manner. We want to encourage bankers to look at youth as feasible business partners to do business with, just as how venture capitalists are looking at youth. They don't invest venture capital with those who are older, the older people. A lot of the innovative companies, some of them are here, who have been invested with venture capital funds, are invested among the youth. Similarly, if you want to do trade activities with the youth, with a business partner, you need someone who has the energy to ensure to be able to be productive, to come up with products and services to complement the financing that you'll be providing. So I think I'll stop now. Maybe in my later interventions, I'll give some real-life examples of how some of the pilots that we are doing and have been successful in changing the mindset of bankers to act more as traders and investors, which we believe would really enhance the financial inclusion and economic empowerment of youth. Thank you very much.
Nabila, would you like to go next?
Assalamu alaikum and good morning, everybody. I would like to begin with the topic of e-commerce. For the past several years, Indonesia is enjoying a lot of attention, especially in the explosion of e-commerce. Many have already mentioned that we have not reached the tipping point yet, but when we talk about e-commerce, I would like to mention two things. There is the buyer and there is the seller. In order for you to participate in e-commerce, especially for the SMEs, you need to have a merchant account. And having a merchant account, being an SMEs, it's going to be very challenging for you because banks are not there to serve the SMEs, because SMEs is just growing their business. So in order for you to have a merchant account, you need to go to a third-party provider in order for you to facilitate your business, for you to actually accept payments online. Why is it important for you to accept payment? Why is it important for you to move away from cash? Because from a seller's perspective, what we've been seeing in Indonesia, sellers typically prefer to accept payment from their customers by way of bank transfers. Why bank transfers for these sellers? Because it is cheap. The typical mode of operation here is that if I want to buy something from a small merchant, I go to the website or I know that this person is selling something. In order for me to make payments, the seller typically will tell me, please transfer this to my bank account. What I have to do is either I log on to my internet banking, but I'm the lucky few that is already in the financial system. I have a tool to make payment. Basically, I can use my internet banking, or I can go to the ATM and do a transfer from my account to the seller's account. That is one way of how commerce is engaging at the moment. But what if I am somebody that is young? What if I am like you people, the youth of today's generation? Basically, I do not have a bank account. How else can I participate in making payments online? So in order for us to complete that engagement, the solution that we have today for youth basically is to use third-party infrastructure. What I mean by that is that we work with a convenience store for people who do not have access to bank account to actually make payment through this third-party channel. Go to a convenience store, I can shop online, but I can also make cash payments through this infrastructure. What I'm trying to say here basically is that cash is predominantly the mode of how we are transacting altogether. But cash is actually anonymous. There is no identity behind cash. Just now, what Hassan is saying basically is that, in order for you to get loans or in order for you to get certain benefits, certain financial benefits, you need to be in a system. At the moment, what we're seeing is that a lot of the transactions are not within the system. How can we then engage the youth of today to be in the financial systems? What are the issues that are preventing them to be in the financial system? To get a bank account could be something that is very tedious, but I'm very certain that a lot of our banks today have gone to schools to engage with students so that they can open a bank account. But having a bank account is also pointless when you can't do anything with it. At the moment, perhaps you have a bank account, but you have an access to the ATM. What do you do with it? You can only draw money. At the end of the day, you are left with cash. You're transacting with cash. What other innovation can we actually introduce to the market so that the youth of today can then embrace and get into the financial services? At the end of the day, if you want to excel or you want to better your life, you would one day transform from being just a buyer or someone who pays for good or a consumer. You might want to be somebody who wants to start a business, but you need to have a profile. By being in a system, you would actually initiate a certain kind of profile that might help you in the long run to get to where we are trying to discuss today. How do we get you into the financial system? That's all that I have as my opening. Perhaps we can discuss about this as we debate in the panel. Thank you.
Thank you very much, Nabila. Mohammed.
Assalamu alaikum wa rahmatullahi wa barakatuh. Just to add a little bit more to my introduction, to bring it a little bit more into reality. So I was born in London and grew up in the UK, but my parents came from Bangladesh, and at the time when I grew up, Bangladesh was a basket case economy, which had been famously reported and predicted by people like Henry Kissinger that it would be a failed state in the sort of mid-70s and late 70s. So I grew up seeing this huge contrast between the abject poverty of the country where my parents came from and the relatively prosperous wealth of the UK. And this has stayed with me throughout my career, I would say. So I'd like to maybe, with that context, maybe make three messages, if I may. One would be about the opportunity, and really to stress how the opportunity today for us to address the challenges that we're talking about is an unprecedented opportunity. Secondly, about the journey that we've taken so far over the last 20 or so years, with the evolution of different models for addressing financial inclusion. And why is it that today, again, we have a window of opportunity to put the right models into place? And thirdly, what is it that needs to happen now? So what are the critical factors, if you like, that are going to make all this work? So about the opportunities, so as Mehdi and Khalid had said in the introduction, there are something like 2 billion people today in the world, who do not have access to a financial institution. So the other point to think about here is how many people have access to a mobile phone? And the answer is 4 billion. So we have 7 billion population in the world and 4 billion people with mobile phones. So I can guarantee you, without doing any real analysis, that of the 2 billion who don't have access to a financial institution, a very large proportion of them do have access to a mobile phone. So the addressable market to reach those people with a payments model that could be accessed by them in real time and in their hands is not going to be far short of 2 billion, because most of them will have a mobile phone account. So from an opportunity perspective, that's why I think it's an unprecedented opportunity today. Secondly, a word about the models. So in the last 20 years, and as Ahmed also mentioned, we have seen an evolution of a number of models. And indeed, the banks were ones that began models to try and include more people financially. And Grameen Bank was indeed a pioneer in that. But what was the problem that they were trying to solve? The problem they were trying to solve was a problem of lack of access to credit. So the problem was that borrowers didn't have assets, and so in the traditional bank model, they were not able to borrow because they could not show assets to put down as collateral. Then about 10 years later, we had the advent of mobile payments, and we began with the very famous story of M-Pesa in Kenya. When I used to work for Vodafone Group, I was on the launch committee of M-Pesa when we introduced the same service in Egypt. And what I can say is that the problem we were trying to address with payments was a slightly different problem to the one that Grameen Bank had addressed through micro-lending. The problem now wasn't about credit or about collateral. The problem was about moving money from one location to another, moving money from a son to a mother, moving money from a brother to a sister, because they're trying to send money home, they're trying to finance the school fees, or whatever it might be. And M-Pesa, of course, was very, very successful in its own right. It has more than 20 million users in a country with 35 million population, and something staggering like 25% of Kenyan GDP is transacted over M-Pesa. It's an absolutely staggering figure. Now, what's happened is that we've had bank-led financial inclusion, and we've had mobile operator-led financial inclusion, particularly in Kenya, because that's a country where the central bank allowed a mobile phone operator to take a banking license. But today, and the reason why I think it's an unprecedented opportunity, is because we have a third type of model that's emerging, which I would call a hybrid model between banks and telcos. And there are several examples of this coming up, but what's now beginning to happen that's really interesting is banks and telcos beginning to work a little bit more closely together, so they're regulated in the right way, but at the same time they can benefit from the distribution access that telcos have. So for that reason, I think it's a very interesting time. So companies like bKash, companies like Hello Group in Southern Africa are good examples now of the emergence of hybrid models. And thirdly, what are the critical success factors? So what really needs to happen now for all of this to really become successful? And I would share a few small points. So one would be that I think we really need to understand what the customer needs. The customer might need credit, the customer might need payment, and as we'll see in the workshop that we'll run later this afternoon to think about inclusion solutions, it's really important to spend time understanding what the different segment of customer needs, because the different segments have different needs. Secondly, the business model. Let's take the opportunity now to craft the business models that will actually work for scaling up in the future. They will require cross-industry collaboration, particularly across financial services, technology, and communications. Thirdly, the distribution channels. For us to make a dent on the 2 billion that don't have access, we need to have distribution channels that really reach many, many people. So we need to be able to get beyond interesting pilots, good programs, into services that really scale. So that, I think, is a great thing for us to aspire to. And finally, the supporting policy and regulatory framework. So let the framework be one that encourages innovation, doesn't mind failure, as long as it happens quickly and doesn't drag on, and then also allows different types of models to emerge. Thanks very much.
Thank you, Mohammed. Ahmed, do you want to make the final set of remarks before we open up the discussion?
Assalamu alaikum. I'd like to thank the IDB for allowing me to participate today in today's discussion. I'd like to thank Mehdi Hassan for the generous introduction and my fellow panelists. My comments hopefully will be pretty brief, but mainly I want to address why this issue is important. In 2011, I had the privilege of being a journalist in Cairo, and the reason I was in Cairo is because an economic magazine asked me to go interview Joseph Stiglitz, who was there as part of an economic conference. Joseph Stiglitz is a Nobel Prize-winning economist out of Columbia University. Egypt was growing at about 7% annually at that point, and people were very optimistic that things would continue to develop as they were. This is a time when people talked about the BRICS countries as being at the vanguard, I guess, of global economic growth, and there was a perception that maybe Egypt would join that group if things continued as they were. So in the interview with Professor Stiglitz, it was a very, I think, optimistic interview, but at one stage he said to me, if this country doesn't get its youth unemployment figures under control, they're going to have some big challenges on their hands. And it was a prophetic statement because 2 weeks later or so, the revolution started, and I had the privilege of covering that as well. So that experience drove home, I think, why economic participation amongst young people is so critical. It's hard to think of things like political justice or human rights in a vacuum. Economic justice is a very, very important part of that equation. And too often when we think about human development in our countries, I mean, this is a South-South oriented group, we fail to consider the way in which economic empowerment may begin to impact things like political accountability and human rights overall. So that's the first reason I think this issue is so critical for us to talk about and work on, which is that economic accountability or economic participation leads to political accountability, I believe. The second reason this issue is so important is that youth aren't youth forever. The decisions that we make today, the economic participation that people can engage in when they're younger, well, it has a compounding effect over the course of their lives. Early interventions matter. When you look at a place like the United States, one of the biggest differences between at-risk youth versus youth who tend to thrive is the benefits that are passed on to them by their parents, by their families. And so somebody who opens a savings account today at 20 may be a parent at 25, may be able to participate in better health care for their children at 30, to invest in that child's education. And so the benefits tend to be cumulative over time. And finally, youth. People talk about youth as being an important source of innovation within economies. I think lots of different kinds of people innovate, but yes, it's true. Young people tend to have more of an interest in emerging technologies, and oftentimes when you look at the developing world, there is a viable economic model where more export-oriented growth may be better over time. And so having youth participate early on, to the extent that they can help innovate, I think is critical in that sense as well. Thank you very much for listening, and very eager for the conversation. Thank you.
Thank you very much to all of our panelists. I want to broaden it out now and open it up for discussion between you all. I want to kick off first with some real-world examples, because we talked a lot about principles and about what we want to see and what we've seen, and about what can happen and might happen. And Hassan, you mentioned about real-world examples. So do you want to give us a few examples that you weren't able to make in our remarks, then we'll get the response from some of the other panelists to that. And we also have people who are running their own companies here too.
Okay, thank you so much. One of the projects that we are involved in is supporting Bank of Khartoum in Sudan. And what we did was basically not just provide financial support, but provide the capacity building aspect to help the bank understand the business risk and be involved in the business. So the bank did a market assessment study, and it was found that tomatoes in Sudan cost 6 times more expensive in summer than during winter. But you need to build greenhouses to grow tomatoes in Sudan because it's very hot. So from this business opportunity that was identified, a detailed feasibility study was done, and the bank decided to approve and the bank, meaning Bank of Khartoum, decided to approve $4 million in microfinance. Now, microfinance is supposed to be $1,000, $100, but this is a $4 million project to build 125 greenhouses and through a Mudaraba operation, which is a venture capital financing operation. Yeah? Who are the beneficiaries? These are 600 youth, poor youth, who will benefit from it. How did they go about finding the youth? They went to an agricultural university in Khartoum and did interviews with the youth. So they did a call for interviews, just like if you want to get a job. Youth came in with their CVs, they interviewed them. Did they ask for any collateral? No. What they did was, each youth, they are all poor, they signed a letter of commitment that they will remain committed to the project for the period of 5 years. So they selected 600 youth, and the 600 youth began working with the bank. Now, the bank does not know anything about doing greenhouses business, so they hired a Turkish consultant to provide training to the youth. They hired a Turkish construction firm through open international bidding to construct 125 greenhouses, about 1,400 square meters size each, with the latest technologies of heat sensor, and humidity sensors and so on. The youth worked on it with the consultant. The consultant helped them to mitigate the risks, all those. The products, the tomatoes, and they also grew some other vegetables, were sold. Who sold them? The bank. The bank had a master contract with one of the hypermarkets in Sudan, which is Sana'a Hypermarket in Sudan, a big, large chain of supermarkets. 60% of the profits went to the bank, 40% of the profits went to the youth beneficiaries, and this 40% is distributed among the youth. The youth earned, during the lifetime of the project, twice as much as what they would have learned if they would have worked in someone else's field. But when I was in Khartoum and I actually spoke to the youth, they said, yeah, okay, the pay is good, it fluctuates, sometimes they earn more because the profits are more, sometimes they earn less, but generally it's stable. But what we are looking out for is at the end of 5 years. So what happens after the end of 5 years? Because under the agreement, at the end of 5 years, the youth would become a cooperative, and they would run the business on their own. And the bank would exit from the investment. The bank would have earned, the target return was 30%, but at the time when I visited, they were achieving 22% ROI. So the bank would exit from the investment, and they will start another replicate and the similar investment in somewhere else. So this is one example of how a bank provides venture capital investment, not to technology startups like typical VCs do, but to even possibly agricultural companies. And interestingly enough, I think the Bank of Khartoum did an even better job than any multilateral institution would have done. Being on the ground, they were actually doing an MDB's job, creating an agricultural farm, creating employment in a sustainable manner. So it's really an innovation on our end.
Hassan, you've talked about microfinance, and obviously that's your background and what you do at the IDB. What would you say to critics, especially in the West, who say microfinance had its day in 2006-07 when Muhammad Yunus won his Nobel Prize. Since then, there's been many failures in that sector. It's not the silver bullet that some may have suggested a decade ago. What would you say to those critics?
Absolutely, and this is why we believe that microfinance has its limitations. It is not a silver bullet. Now, I would not say that Islamic microfinance is a silver bullet, but I would say that it is a more comprehensive solution. In this example that I just shown, is the bank did not just provide access to finance. They provided access to markets. They provided the expertise. The youth came with some level of knowledge, but they do not know how to organize a business. They helped them in doing so. To help a small company, and many of them will also agree with me, money is just one part of the equation. You need to have other aspects. And this is not something that the bank possibly can provide, but it's not providing as a partner. If all banks, in all the commercials, they say we partner with our clients, but are they really doing that? In the pilots that we have done, we are changing the mentality of the banks really to be business partners and to share the risk with their clients and to grow with their clients.
Mohammed, I saw you shaking your head there or nodding. Do you agree with that? What role do you think microfinance can play in terms of bringing in a new generation, a next generation, a younger generation into the financial world?
Yeah, no, thanks for bringing me in. I would say, I think it's a very interesting question that, has microcredit had its day? And I think that microcredit did what it could within the model that it could in its initial few years, but there were some constraints to how much microcredit could grow under that system. So, for example, Grameen Bank had a geography to operate within, which was Bangladesh, and it had a certain amount of limitation as to how many people it could physically reach due to the reach of its own NGO, if you like. And I think my sense about why there is a big opportunity now is because I think payments and the ubiquity of mobile communication means that there are many, many more millions of people who are reachable than those who are reachable through the NGO network 10 years ago. So I think, yes, microcredit does have a future, because at the end of the day, are there still people who need $100 or $1,000 loans? Yes, there are. That's not changed. But the issue now is, how do we reach them in a better way? And because of payments infrastructure developing, there should be better ways to reach many, many more of those people. So that's why I think there's an element of hybrid between the microcredit world and the payments world. And if that happens, then I think we could really reach a lot more.
And you say if that happens, we can reach more. I mean, one of the obstacles, surely, to that happening is actually educating people about the opportunities and possibilities. Because you gave that fascinating statistic about 2 billion unbanked versus 4 billion people with mobile phones. I saw a statistic about the Middle East and North Africa where I think 9 out of 10 people have mobile phone subscriptions, only 1 in 5 have bank accounts. So the gap is huge. The reasons why people get a mobile phone are very different to the reasons why people get a savings account or a credit card. How do you bridge that gap? How do you explain to people that actually what you're doing here can help you here and vice versa?
So my sense would be that that the learning will be really quick, because I think all of us, when we have a need, we figure it out. And so my sense is that it's actually, the challenge actually is to bring the right types of services to market that people can benefit from. I mean, there have been plenty of examples of service innovation in this space which have not scaled, but that's been because of specific failures in the service. So, for example, fishermen. So in Gujarat in India a few years ago, a major technology company launched a fisherman's pricing service to give fishermen up-to-date pricing on fish to their mobile phones. Now that sounds very good, but the problem was that they were taking the pricing data from the State Fisheries Board of Gujarat and sending that out to everybody. But the reality is that the price you get for fish varies from one market to another, even 10 kilometers apart. And so the granularity of information they needed wasn't coming from the service, so the service failed. The reason why the service failed isn't because the fishermen can't benefit from it, but because a little bit more thinking needs to go into the service design. And just one data point, if I may.
Please.
So I work a lot in Myanmar these days, advising the government on developing the telecoms policy in the country. And Myanmar is a great example because it's a country that's gone from no phone to smartphone. There was 10% mobile penetration 2 years ago, and now there's 60%, and everybody who's taken a phone has bought a smartphone. And interestingly, the monthly usage of mobile data in Myanmar, on average, is about 400 megabytes for those who use data. And in India, which has had mobile data for 7 or 8 years already, the average is 200 megabytes. So I think the point comes out, which is that if you equip people with services they can use, they will use it, they will figure it out. So I think it's about service.
Do you think that also applies to saving? Because say I'm in need of money for some short-term need, I'm in need for whatever, a business purposes, for a private purpose, and I can, the mobile money cards, all this explosion of getting money to your phone, that still doesn't help me in terms of saving for the long run, does it? Especially when young people who have such short-termist approach to life don't realize the importance of putting aside money for a rainy day. How does technology help you? How does technology encourage people to save?
Well, I think that is a really good question. I think that's a much harder one to answer in the same positivity, because I think there is a different element of learning curve that needs to be gone through.
More financial literacy on the saving, on the saving front. Nabila, let me ask you this. You run the biggest independent electronics payment providing platform in Indonesia. I mean, first of all, how replicable is that model across some of the emerging and developing economies we're talking about? I mean, I don't know, you tell me, how common is it in other countries? But also, what kind of challenges do you face from government, something none of you really raised yet, in terms of regulation, in terms of support, in terms of infrastructure, to do what you're doing in the in the digital space?
Well, hello? Well, is the model replicable in other parts of the region? Yes, because we're talking about SMEs. And my point of interest would be how to engage with SMEs. And because SMEs, they are serving a large group of communities. It could be perhaps the youth who would like to actually engage in trades. They are selling, because for Indonesia especially, people are selling widely on social platforms. And selling on social platforms, what does that mean? It means that we need to accept payments. And accepting payments in such social platform, for example, Facebook, right now I believe among the youth, they are very much using Line instead of Facebook, because Facebook are more for the matured market. So these social platforms are available globally, basically. But then when you need to engage payments on such platforms, once those platforms allow payments to be integrated, it's no longer just a platform for advertisements, it's no longer just a platform for chatting or for exchanging social information. But such platforms now are embracing commerce, because we are moving from just selling on a website, but we are also selling using any social platform that is supported within that mobile device, and which is very important.
Do you encounter any trust issues? So a lot of people, there's a big debate not just about privacy online, but security online. It's one thing to use your device to talk to your friends or play games. Very big if you're transferring large sums of money, doing business on your phone in particular. Do you have people ask you questions about that?
Oh, absolutely. Because especially coming from a very neutral position, we are not a bank, we are not a telco, but we are very specific in providing a payment mechanism, both for the seller and for the buyer. So trust is a very, very important topic of discussion amongst seller and buyer, especially from the buyer who actually wants to participate in a transaction. So in order for them to fund, for example, using an e-money, which is a product that we believe would be able to reach up more to the mass market, because it's easier for you to actually open an account. It is very much casual rather than the formal financial banking solution. But when somebody is willing to fund into a platform, they need to be able to have the ability to control that platform as well. So what does that mean? I can put in my money, I can withdraw my money anytime, and if I use that platform to make a transaction, I should be able to get my money back in case I dislike a product or I do not get what I have set to purchase. So that would be one of the bits and pieces of trust that we can build in educating people to use a digital form of payment. That is from the buyer side. From the seller side, basically, trust would be ensuring the seller that the customer is actually a genuine customer. Because I am, as a seller, I'm blinded. I am trusting a third-party solution to ensure that the customer that the platform brings me are trustworthy, and I have little problems in addressing refunds, cancellation, or chargeback, because those are operational costs for my business.
And just one more quick question specifically on Doku. Is there a particular segment of the population here in Indonesia where you operate that you feel is lagging behind? Is it young people? Is it women? Is it the underprivileged? Is it all of the above in terms of...
I think at this point in time, it's all of the above. We did sort of like a small pilot. We went to schools and we were asking some of the students what do they understand about payments and e-commerce. Most of the students are unaware that they are part of that digital ecosystem. They are unaware that they are actually doing a transaction. What they are aware is that I am making a purchase online. But how they are making a purchase online using what instrument is something that it's not important for them. But once we tell them that, hey, you are part of this e-commerce ecosystem and that you can use other modes of payments, because for some of the privileged youth, typically they will ask their parents' credit card to make a purchase. If they don't have a bank account, as I mentioned earlier, they could essentially go to a convenience store to make a transaction, but that is very cash oriented. But they have another means, but they are not aware of this means that they can actually have a small account that is an informal account that can slowly help them to understand what it means by being in that financial system, being able to have access to the service. And we address a little bit on education, because these people needs to understand how they, once they're in the system, they could also understand a little bit about the financial responsibility. Because once you are transacting online, you should be familiar with things like password and PIN, because you need to know when to keep your password, and do you share your password with anybody? Do you share your PIN with anybody? Because if you want to talk about the convenience of service, people here are very, very relaxed in terms of sharing that information, which is very scary.
It comes back to financial literacy again in education.
Financial literacy, yes, absolutely.
Also the importance of a good memory. I can never remember my password for anything. That's my slight problem. I can't remember passwords. Ahmed, let me ask you a similar question. As how hard was it for you? You're based in the Middle East, in Jordan. How hard was it for you as a young tech entrepreneur, as a 20-something-year-old, setting up your own online lending platform? What kind of obstacles did you face from the government where you are, from your peers, maybe?
Sure. Just to be clear, I'm now 31, so thank you.
You were young once.
I was, yeah. No, so the challenges were rife when we were starting Liwa. So my co-founder and I started the company in the U.S. Our first operational base in Jordan, and we were required to register a local entity in Jordan.
And just explain a little bit to the crowd exactly what Liwa does for those who aren't
familiar. Absolutely, sure. Very simply, we're just a lending company for small businesses. We offer a Murabaha product, focus on working capital loans. So lots of our clients import goods from, say, China or Turkey, and they resell to the retail markets. So we raised $2.8 million in venture capital in Jordan from investors who are both Middle Eastern and US based. One of the biggest challenges we faced in doing that is that there's not a lot of faith in the viability of Middle Eastern markets from a political stability point of view. I touched upon earlier the virtuous cycle that occurs when you have economic participation and eventually political accountability, but you need to start somewhere. And so I'd say very understandably people were wary of taking Middle Eastern risk or Middle East country risk when it's not the UAE. One of the other features, I'm going to transition slightly, one of the features in the environment that we operate in is that all of our borrowers submit their applications in Arabic. Arabic as an IT technology, or I'm sorry, as an IT language is not regarded as one of the more prevalent languages. So I think less than 3% of online content actually exists in Arabic. But what we learned very quickly was that there's a generation emerging, not just of just young people, but people at all ages, who've now been using WhatsApp and Facebook for 2 or 3 years, maybe even longer, and they've acquired a new skill around typing in Arabic. And so that was an unexpected positive development that we've even seen over the past 2 years.
And I read a stat about how SMEs in emerging economies contribute 1/3 to GDP, and yet half of them lack financing. And the credit gap in emerging economies is estimated at between $2.1 and $2.6 trillion. Is that overcomable going forward? How optimistic are you that you can bridge such a massive gap?
Absolutely. So, I mean, I'll give you the relevant figures for the markets that we operate in. Well, right now, one market. But in the MENA region, so Middle East, North Africa region, the SME funding gap stands at about $240 or $50 billion, estimated by the World Bank IFC. Of all bank lending in the Middle East, 8% of it actually goes to SMEs. In a developed economy like, say, the UK or the United States, SMEs comprise anywhere from 60 to 65% of GDP growth, and an equal proportion of or they contribute an equal proportion to the jobs numbers. In a place like Egypt or Jordan, where the informal sector is much more important to economic life, the contributions to GDP are similar, about 60 to 65%, but the employment figures are much higher. In Egypt, estimated up to 85% of people work within the SME sector when you account for the informal sector. So the critical contribution of SMEs to any economic activity anywhere in the world, probably with exception of a few economies in the Arabian Gulf, can't be overstated. Banks fundamentally misunderstand the risk. When you look at some of the default numbers in the microfinance sector, when you look at in places OPIC, for instance, and other loan guarantee organizations, when they actually do subsidize the risk from the perspective of the banks, the default figures are actually very low, less than 1% in many cases. And so that implies fundamentally a market failure. It's not that the sector is unduly risky, it's that people don't understand the risk. And so can we overcome the gap? Absolutely. What does it require? Better risk modeling tools, which is one of the things that we do at Liwan.
Okay. And just before I open it up to the audience, before we finish, I want to ask all of you one question about, you've all been relatively optimistic about what's coming down the line, about the role that technology can play. Putting your pessimist hats on, what do you think are the things you worry about most that could prevent those numbers coming down in terms of bringing more and more people into access? I'm just going to briefly, what worries you? What are you concerned about?
Well, the main concern that we've always had is the willingness of banks to adopt to change. Some of the most successful examples that I can share, all examples that we have are all in more troubling countries, interesting enough. Sudan, Palestine, Benin, Guinea, and so on. These are the ones that the banks really have little choice but to change, and they were very receptive to our ideas.
The change is forced upon them rather than taken willingly.
Yes, absolutely.
Any of the other three of you want to mention anything? Any obstacles that we haven't talked about?
Yes.
Mohammed?
Yeah, I would say that I would say the risk of sort of financial failure on a grand scale. So, the GFC was a very good wake-up call for all of us as to how if the regulatory structures underlying the financial system aren't well maintained, then we can have a big issue. And I think that we're about to enter into a phase over the next 10 or 20 years where we'll have a lot more democratization of financing to much smaller enterprises. But I think what's important is that we design the operating model in a way that is fit for that growth. So at the moment, I think the problem is that the large-scale financial institutions-led operating model doesn't work for small enterprises. We need a hybrid model, as I've been saying, in my view, but I think we need the regulatory structure for that to be thought through well enough. So for me, putting my pessimist hat on would be that what we don't want in 5 years' time is some big meltdown that happens as a result of all this. So.
Nabila, Ahmed, anything you want to add briefly?
Yes.
After you.
Well, I share the same thoughts because the barriers for us would be, if the regulatory framework is not well designed, especially when we want to reach out to that market segment. A lot of the business models needs to be challenged. We are very highly dependent on existing infrastructure, like the bank infrastructure, for us to ensure that we can include financial services. But if the business model is not redefined, then we will hit the same stumbling blocks.
Okay.
Right, and we've talked about the youth issue without really disambiguating that there's a young women problem or a women participation in the labor force problem, especially in the part of the world where I operate. The recent Saudi Plan 2030 women's labor force participation is supposed to increase from 22% to 30%. That's still not good enough. Jordan is even lower than that. And unless we can tackle the cultural challenges around women's participation in the labor force, I think a lot of what we're talking about won't happen.
Very good point. I'm going to throw it open to the floor before we finish. I think we've got about 10 minutes or so to take a few questions from the crowd, if they're brief. Anyone got points? Is there a microphone roving? I think there is. Gentleman there in the fourth row, yes? Do you want to wait for the mic to come to you? If we can keep questions and answers as briefly as possible, that'd be great.
All right, thank you. Would like to ask a question to our brother here from Jordan. Okay. Where did you get the money for the capital? And another thing is the venture capital means to you? Does it mean anything to you, venture capital? And do you have any access to, let us say, high net worth individual? Thank you.
Great, thank you for the question. So startup capital mainly came from my wife. Well, my co-founder and I spent a year and a half struggling to raise the first $500,000 for the business. We recently raised another $2.3 million about a month ago. It's a struggle to raise money in anywhere that isn't, I'd say even in the United States at this point. Critically, the things that people look for is a viable business opportunity, or you're operating already. I'd say it's the biggest difference between the emerging markets venture capital scene in the United States, is that you can't raise money on an idea. You need to have something operational. We do have access to high net worth individuals. I think in general, when you're raising venture capital, it makes a lot of sense to work with institutions. So right now, the EBRD and the European Investment Bank are indirectly invested in my company, and they can offer a lot more than just cash. And so those are the things that.
How much did your former youth work in favor or against you when you were setting out?
I think in many ways it does work. It depends on the technology you're developing. If it's something where somebody thinks that you have an insight because you're young, that's great. If it's financial services or healthcare, you probably should work to gain some expertise and work to align yourselves with people who do have substantially more experience.
Okay, let's go back to the audience. Anyone else want to raise any questions or points or comments? I can't see anyone, no? Oh, yes, yep. Wow, there's lights, can't see anything.
Assalamu alaikum, everybody. My question goes to the colleague from Southern Sudan pilot.
Can you speak up a little bit?
My question goes to the brother who was talking about the pilots in Sudan. I'm particularly interested in the impacts of the project. I want to know the methodology that was used to track the counterfactual. For instance, you talk about 600 youths. Are you having methodology to look at the other youths who are not engaged in the agricultural sector and compare the kind of results and be able to see whether it's making impact? Thank you.
Okay, thank you. Excellent question. In terms of monitoring whether the youth are earning or there's an impact to the youth in that particular, the 600 youth under the project, what we did was basically at the very start, as I said, the bank did a feasibility study. So from the very beginning, the bank knows there's a target return of 30%. The bank knows that the youth will earn X amount of Sudanese guinea, and the bank would earn X amount of Sudanese guinea, and over the period of 5 years, how much will be the return to the bank. From that feasibility study, there's scenario planning and so on, and every single day there is a report based on how much money the company makes. So whether it meets the target or not, and they have a red, yellow, green system where if for some reason there is not enough productivity, then straight away, there is a mechanism to find out why is the project not achieving the productivity levels that it should. So in this case, you can see that the bank is very proactive in ensuring that the company makes money. If the company does not make money, not just the beneficiaries won't make money, the bank would also not make money. If the bank, under Mudaraba, as you know, if the company collapses, for some reason there's a major disaster and all the assets are destroyed, the company loses all its assets. The beneficiaries will just lose their jobs, yes, but the company loses all its assets and all of the profits goes down the drain. So the bank has has a strong motivation to ensure that it works, the company works. Yeah, thank you.
Do you have any more questions from the audience? Anyone else want to raise a point? Make a point? Yes, gentleman there. Do you want to wait for the microphone to come to you?
Assalamu alaikum. My name is Abd Majid Abdullahi. I am from Islamic Development Bank. I would like to ask the panelists how the multilateral development banks could improve the capacity of the young people to access financing. One of the issues, critical issues, that a young man can face or a lady can face is the issue of experience and capacity. So what do you think the multilateral development banks could do in that regard? Thank you very much.
Good question. Mohammed, Nabila, do you want to try that one, either of you?
Thank you very much for the question. Alaikum salam. I think that there is quite a lot that your organization and others can do. So I'll just give an example. When I lived in Egypt, Vodafone had a program with UNICEF around educating young Egyptians aged between 12 and about 17, 18, around how to manage money and how to be more knowledgeable about the responsibilities of finance. And I think that getting into some of those fundamentals and basics is probably very, very important. And I think you have access to governments in a way that most private sector organizations don't. You can engage with the education ministries in a way that you can get broader sponsorship for programs of this sort. So I think you'd have a very, very valuable role to play.
Do you want to add anything there? Okay. Is there any more questions from the audience?
Can I just say on that last question, my wife works for the Queen Rania Foundation in Jordan, which is an education foundation. One of the things that they've been working on in Jordan is requiring a financial literacy course at the high school level. It hasn't been implemented, but it's a great idea as part of the curriculum.
And let me just ask one last question before we finish. building on the gentleman's question about multilateral institutions, I mean, the IDB, the Islamic Development Bank, answers to the finance ministers of the OIC. Let me ask the three non-IDB members of the panel whether they think OIC member nations, Muslim majority countries, the governments of those countries are doing enough to tackle financial inclusion. Have they put it high enough up their priority list, do you think, from your own experiences living and working in the Muslim majority world?
I think there's a lot of there are lots of policy initiatives coming out of the Middle East which seem rightly oriented. Implementation is always a challenge. I'll stop there.
Nabila?
Implementation is absolutely a challenge. The banks are playing their role, but then the message to the public at large, especially the youth community, we need to make things simple for them, but then the campaigns need to be more well-defined to address the market. Beyond the youth community, there are also cultural differences in Indonesia itself, because when you go from city to cities, again, the message in order for us to push financial literacy needs to be toned according to each of the cultural groups. I think that's very important. So not enough education has been pushed by a lot of the institutions to engage financial literacy in this country.
Mohammed?
Yeah, I would say that amongst the OIC countries, probably a lot more can be done to compare experience and come up with the best practices from different countries, so to collaborate more. So for example, you have bKash in Bangladesh, you have Easy Paisa in Pakistan, you have M-Pesa in Kenya, and you have a number of other models in countries which have got large Muslim populations. So how can the OIC or even the IDB play a catalyst role to bring this learning together? Because I think a lot of the learnings from each of these models can be cross-fertilized.
Thank you very much to you all. Ladies and gentlemen, it's been a fascinating, wide-ranging discussion. I think we covered a lot of things. We heard from Hassan about the third wave of financial inclusion, the empowerment of youth through Islamic microfinance. We heard about the rise of innovation in e-commerce from Nabila, going beyond basic bank accounts and ATMs, building trust, building financial literacy. We heard about the importance, the need from Mohammed for new hybrid models of governments and telcos working together, and the disruptive role that mobile technology can play in bringing down the number of unbanked people. We heard from Ahmed about the importance of early participation of youth in the financial sector, the virtuous cycle, I think he put it, of economic participation leading to political accountability, we hope. And the biggest point is this: I think what's clear from today's very brief discussion, this could have gone on for many hours, is that the solutions are out there. The models are out there, as Mohammed mentioned in his last answer. All that's required is the will, the implementation, the will and implementation of many of the people in this room. We cannot allow, my personal view, we cannot allow the debate on finance, on poverty, on inequality, on financial inclusion to be dominated only by the views of big banks or big financial institutions or of developed countries, or only by the interests of the top 1%. Financial inclusion is all about bringing the rest, the 99%, into the system, not leaving poor people behind, or rural people behind, or women behind, or the young behind. And it's far from being all doom and gloom. I began this session with a number, 2 billion. That's the number of unbanked adults in the world today. It's a depressingly high number, but don't forget that in 2011, just 4 years ago, it was 2.5 billion unbanked adults in the world. In 4 years, it's come down by 20%, by 500 million people. That's no small achievement. And I think we can all agree, in part due to events like this and due to the actions of a lot of the talented people we see on this stage and in the crowd and later today, we can keep going and get that number down from 2 billion to 1.5 billion to 1 billion, generation after generation, beginning with our next generation. But that's all we have time for. Thanks for listening. A big round of applause to our great panel. And I believe this next session will start after a break. Thank you, guys.
Thank you very much, the Mehdi Hassan and the panelists. Ladies and gentlemen, we'll give you 5 minutes to stretch your legs as we set up the stage for the next session. Please stay with us. Thank you very much.
Thank you. Great to meet you.
We'll have our showcase sessions
If you're ever in DC,
starting shortly. Thank you.
If you guys are ever in DC, please.